Alright guys, so let's get right into it. So I am going to be talking about the 4-hour time frame for major fair value gaps. Let me put my face in the camera. Just give me 1 second. It's a fucking thing. So you're going to really like this video. This video is going to have a lot of value on it. In it. QuickTime player. Alrighty, let's get started. So let me just minimize this. Okay, so the 4-hour time frame for major FVG gaps. So why is the 4-hour time frame important for major fair value gaps? And I use the 4-hour time frame personally when I'm trading. And number one, it helps you become aware of possible reversals, and I'll show you an example of that in the charts in a bit. Because when you're trading and you think a trend is bullish on the 15-minute, but then on the 4-hour there's a big ass fair value gap that's about that the bullish trend on the 15-minute is about to reject and reverse from, and you may have not known that because you didn't check the 4-hour. So I use the 4-hour time frame for two things. I use it for the long-term trend, and I use it for helping me to be aware of possible reversals. So the long-term trend is the reason why I use the 4-hour time frame is what I do. I zoom all the way out on the 4-hour time frame on my chart to show me the most relevant market structure, and I'll do it right now. And so like right now, if I'm on the 4-hour on this pair, and this is Euro GBP, you can clearly see that those black lines are the structure that form the descending decline of this bearish trend. And so yeah, so the 4-hour, like I said, I use it for my long-term trends, but I don't actually take entries off it. People think that, oh, if you see a gap on the 4-hour, you can enter off of that. A 4-hour gap is with a 4-hour gap, you can have a 80 pips 40 pip stop loss, not even realize it, because you'll think it's a small little trade, and then you go down to the 15-minute chart, and then and then your risk to reward is way off because of that 4-hour gap. So what I do here is the secret. I always wait for a confirmation, and what I mean by that is, so like right now, let's say, let me show you something. Let's say I wanted to buy. Why is that acting slow like that? Hold on, let me see something, guys. Let's say I wanted to buy something, right? And I wanted to buy this fair value gap here when it gets low, right? So I would, instead of buying it right directly on this chart, sorry, it's a little laggy. Instead of buying it directly on this chart, I will go ahead and wait for price to come down into this fair value gap and show me a break of structure, change of character on the 15-minute to 5-minute, and then I can enter. So basically what I am doing is I'm waiting for a confirmation on the smaller time frame, and that confirmation is a trend disruption. So if the trend is bearish, which it will be if it's going to this fair value gap, then I'm going to wait for that bearish trend on the short term to be disrupted by demand. And then I enter off of that demand. And then the demand being placed will usually be it will display a fair value gap for you to trade. So yeah, yeah, I know this video wasn't that long. It was just a quick little video, and it was literally that simple. So whenever you start on a chart, always make sure you check the 4-hour for the long-term trend, for your gaps, and also I want to add another thing. And you also want to check it for your not just your trend, but you want to check it for your like I said, your major gaps, the long-term trend, and yeah, I don't know why I was thinking I was saying something else. Sorry about that. Excuse me. But yeah, here's another secret, guys. If you guys are trading futures, 9 a.m. to 11 a.m. 9 a.m. to 11 p.m. is when I trade. It's the most volatile, most volume. There's more activity happening, so I like to trade then. I can find way more gaps then than any other time. And if you're a forex trader, a secret that I have for you, and I trade both, is don't trade any pair unless there is actual economic news coming out for the pair, because if the economic news is out, it's almost guaranteed that the pair will move, and then you have a higher likelihood of finding fair value gaps and supply and demand setups on that, because you were patient and waited for you were patient and looked at the economic calendar, and then the assets that you're choosing on your watch list on TradingView, it should be based off the news. Like, I don't randomly just choose stuff to trade. I look at the economic calendar like I'm doing right now. I'll show you. I look at the economic calendar, and it shows me euros moving, GBP's moving, USD's moving. I'm only trading these. And if I'm trading futures, I'm only trading futures when the US dollar is moving. And it's set to orange and red to show me medium to high volume news. If there's no volume in the market, there is no movement. Volume is what creates those expansions that you see, that creates those gaps in the first place. So in order to see more fair value gaps, you need more market expansion, and that market expansion is created by volume, which is created by news. And it's a simple cheat sheet for you guys to use. So I hope this was valuable. I hope you guys aren't lazy and will actually apply this. And yeah, peace.